Right now, as you're watching this video, the average American family is paying $2,046 every single month just in bills. Mortgage, car payment, credit cards, health insurance, utilities, internet, phone. $2,046 every single month gone. And every single month, that number gets higher. Not lower, higher. But here is what nobody is telling you. 90 years ago, in the worst economic collapse this country has ever seen, families across rural America paid almost nothing. Zero mortgage stress, zero credit card payments, zero utility bills they couldn't handle. And it was not luck. It was a system. A specific, practical financial system that kept ordinary American families completely free from the control of banks. A system so effective that the banking industry spent the next 3 decades making sure it disappeared from American life forever. Today, I am bringing it back. Let me ask you something personal. When was the last time you looked at your bank account and felt genuinely free? Not relieved, not okay for now, but actually free. For most Americans today, that feeling doesn't exist anymore. You wake up in the morning, and before your feet hit the floor, you already owe someone money. The mortgage company, the credit card company, the utility company, the insurance company. Every single month is a race to earn enough to pay everyone else first, and hope something is left over for you. And the most painful part? You were never taught another way. Nobody in school taught you what your great-grandparents knew. Nobody in college explained the financial systems that ordinary Americans used for generations before the banking industry convinced everyone that debt was normal. Because here is the truth they do not want you to understand. Debt is not normal. Monthly payments are not normal. Living in financial fear every single month is not normal. It is a system, a carefully designed system, built by banks for banks. And the proof is sitting right in the middle of American history, in the one decade when banks lost their power over ordinary people. And those people thrived. Let me tell you about a family, the Harmon family of rural Ohio, 1931. The stock market had already crashed 2 years earlier. Banks across the country were closing their doors. Neighbors were losing farms their families had worked for 3 generations. Grown men were standing in bread lines in every major city in America. But the Harmons were not standing in any bread line. They had food. They had their land. They had their home. And remarkably, they had almost zero monthly financial obligations of any kind. Their neighbor, a banker named Gerald Forsythe, drove out to the Harmon farm one afternoon in the summer of 1931. He expected to find desperate people ready to take whatever loan terms he offered just to survive. Instead, he found Ruth Harmon hanging laundry in a full garden, children running between rows of vegetables, a smokehouse full of preserved meat, a root cellar stocked for winter. Gerald Forsythe went home confused, because the Harmons were not using his bank. They were not using any bank. They were running their entire financial life on a system that had been passed down through their community for generations. A system built specifically to protect ordinary families from exactly what was happening all around them. That system had a name in those communities. They called it living outside the reach. And what it meant was simple. If a bank cannot reach your money, a bank cannot take your home. Over the next 20 minutes, I am going to show you the 5 specific methods that families like the Harmons used. Methods that are still legal today. Methods that your great-grandparents understood, that your bank has made absolutely certain your children will never learn in school. Before we get into the methods, you need to understand something. These methods did not disappear by accident. Between 1933 and 1950, the American banking industry spent an enormous amount of money lobbying the United States government, not to help Americans, to protect bank profits. Because here is what banks discovered during the Great Depression. When ordinary people stopped depending on them, banks lost everything. A family with no mortgage generates zero interest income for a bank. A community with a mutual aid fund generates zero insurance premiums for a corporation. A household that preserves its own food and heats its own home generates zero utility profit for a company. The Depression proved something terrifying to the financial industry. Ordinary Americans, when left with no choice, were completely capable of building financial lives that required absolutely nothing from banks, insurance companies, or utility corporations. And the moment the economy started recovering, those industries moved fast. They lobbied to change contract laws. They lobbied to change school curriculums. They lobbied to make alternative financial structures legally complicated and practically impossible for working families to maintain. They did not make these methods illegal. That would have been too obvious. They just made them invisible. They removed them from every financial education program in America. They made sure no bank advisor would ever mention them. They ensured that generation after generation of American children would grow up believing that monthly debt payments were simply the way life works. They are not. And here is the proof. Method number 1, the Mutual Aid Society. Today, if you get sick, you call your insurance company. You pay your premium, you pay your deductible, you pay your copay. And after all of that, the insurance company still finds a reason to deny part of your claim. The average American family pays over $500 every single month in health and life insurance premiums. Depression families paid nothing because they did not use insurance companies. Instead, communities of 40 to 60 families created what they called mutual aid societies. Every family contributed a small fixed amount, sometimes as little as $2 a month, into a shared community fund controlled entirely by the members themselves. No CEO taking a salary, no shareholders taking profit, no claims adjuster looking for reasons to deny you. When a family had a medical emergency, the fund covered it. When a family lost a crop, the fund covered it. When a family needed a roof repaired after a storm, 30 neighbors showed up with tools. This system was not charity. It was not welfare. It was a financial structure built on one simple truth. 50 families sharing risk together are stronger than 50 families paying a corporation to manage that risk for them. The insurance industry understood this perfectly. By 1945, they had successfully lobbied for regulations that made it nearly impossible for informal mutual aid societies to operate without expensive licensing, legal registration, and government oversight. They did not ban the concept. They buried it under paperwork. But here is what they could not change. The principle still works, and in many states, small community sharing arrangements of under a certain size are still completely legal and completely unregulated today. Your great-grandmother knew this. Your insurance company is counting on you, never finding out. Method number 2, the hardship clause. This one is going to make you angry because it involves something that is still legal today, that your bank has never once mentioned to you. In the 1920s and early 1930s, before banks consolidated their power, private loan agreements between individuals and small community lenders regularly included what was called a hardship clause. A hardship clause was simple. It stated that if the borrower's income dropped below a specified level due to circumstances outside their control, payments could be paused, reduced, or restructured without penalty. Automatically. Built into the original agreement, families used this clause to survive the Depression without losing their homes. Banks hated it. By 1934, standard mortgage contracts had been redesigned to remove any such flexibility. The new contracts gave banks complete power to begin foreclosure proceedings the moment a single payment was missed, regardless of circumstances. Here is what they did not tell you. That clause was removed from the standard contract. It was not removed from the law. To this day, In most states, a borrower has the legal right to request a hardship modification directly from their lender, in writing, before missing a payment. Most banks will not volunteer this information. Most financial advisors will not mention it. It is not in any pamphlet they hand you at closing. But it exists. Depression families did not wait for a crisis before negotiating the terms of their financial agreements. They built protection into every arrangement from the beginning. That is not a mindset banks want you to have. Because a borrower who understands their legal rights is a borrower who is much harder to profit from. Method number 3. The Family Land Trust. This is the method that wealthy American families have been using for generations, quietly, consistently, while working-class families were never told it existed. During the Depression, families who survived bank seizures in their communities did something smart before the crisis hit. They transferred ownership of their property into a family land trust. A land trust is a legal structure in which the property is held by the trust itself, not by any individual. The family retains full use of the property, full control, full benefit. But because no individual technically owns it, a bank cannot seize it to satisfy a personal debt. Wealthy families have used this structure for over a century to protect generational wealth from creditors, lawsuits, and financial collapse. Working-class families were never taught it existed. The Depression families who knew about it learned it from community elders, from local lawyers who genuinely served their neighbors, from the kind of practical financial education that happened at kitchen tables rather than in banks. Today, setting up a family land trust is still completely legal in every state in America. It costs a few $100s with a basic legal document, and it places your most important asset, your home, your land, in a position where most creditors cannot touch it. Your bank will never tell you this. Your financial advisor will likely never mention it. Because a family whose home is protected from seizure is a family that a bank has significantly less power over. And banks are not in the business of reducing their power over you. Method number 4, the mortgage acceleration secret. This one does not require any legal structure. It does not require any community organization. It requires only one small action, taken consistently, that your bank has deliberately designed their entire communication system to prevent you from ever thinking about. Here is a fact. If you have a 30-year mortgage and you pay just one additional payment toward your principal every single year, you will pay off that mortgage in approximately 23 years instead of 30. 7 years of payments? Eliminated. On a $250,000 mortgage, that is approximately $40,000 in interest payments, that you will never pay. Your bank knows this. They have known it since the day you signed your mortgage documents. They have never mentioned it, not once, because those 7 additional years of interest payments represent pure profit for the bank, profit that disappears the moment you understand this simple principle. Depression families, the ones who had any kind of payment obligation, were obsessive about this principle. They called it killing the note early. Every spare dollar, every preserved jar sold at market, every extra hour of labor went toward reducing principal first. Not because they had more money than you, because they understood something your bank spends billions of dollars in marketing every year, making sure you never fully grasp. The faster you eliminate principal, the faster you eliminate the bank's power over your life. 1 extra payment per year, starting this month. That is the entire method. Your great-grandparents knew it instinctively. Your bank is counting on you for getting it by tomorrow. I want you to think about something for a moment. Everything I have shown you today, the Mutual Aid Society, the Hardship Clause, the Family Land Trust, the Mortgage Acceleration Principle, none of it is complicated. None of it requires a finance degree. None of it requires a large income. None of it is illegal. It is simply knowledge. Knowledge that ordinary American families carried in their heads and their hearts for generations. knowledge passed down at kitchen tables, at church gatherings, at community meetings. Knowledge that helped millions of families survive the worst economic collapse in modern American history, with their homes, their land, and their dignity intact. And then, systematically, deliberately, over the course of several decades, that knowledge was removed, not by accident, not by progress, by design. Because an American family that does not need a bank is a family that a bank cannot profit from. And the financial industry in this country has built its entire existence on one single foundation: your dependency, your monthly payment, your belief that there is no other way. Ruth Harmon hung laundry in her garden in the summer of 1931, while her neighbor the banker drove home confused. Her family did not lose their land. They did not stand in bread lines. They did not beg a bank for mercy, because they knew what you now know. The system was designed to keep you paying. The knowledge to step outside that system has always existed. It was just hidden from you, until today. This channel exists for one reason: to bring back the financial knowledge that was removed from American life, so that ordinary families today have the same tools that Depression-era families used to protect everything they built. Next video, I am going to show you 3 more methods, including the one specific legal document that Depression families kept in every home that could stop a bank foreclosure cold, that modern mortgage contracts were specifically redesigned to make you forget about. If you want to see that video the moment it goes live, subscribe right now and hit the bell. Because this is not the kind of information that stays on YouTube forever. Share this video with someone you love who is struggling with bills right now. They deserve to know what was taken from them.